Nvidia's latest earnings, well, they aren't just a report card. They're really a declaration. They signal a fundamental rewiring of the entire global economy, with one company, just one, laying down the tracks for the age of AI. So let's dive into this, because the numbers, they tell a story that goes way beyond just selling chips.
Okay, let's just start with the headline number. I mean, just look at this, $216 billion. Well, to be precise, $215.9 billion in annual revenue. That's a staggering 65% jump from the year before. This isn't just growth, it's an economic shockwave. And it's the foundation for everything else we're about to talk about.
And this really gets to the core of our whole analysis today. The old story, you remember it, was that Nvidia sold the picks and shovels for the AI gold rush. But the new reality? Oh, it's so much bigger. They are now designing the mine, they're building the machinery, and they're managing the entire operation. They've become the chief architect.
So what does it actually mean to be the architect? Well, it all starts with a complete transformation of their business. Let's take a look inside this new model they're calling the AI factory.
This one chart pretty much tells the whole story. The data center segment, it's now 91.5% of their total revenue. Just let that sink in for a second. The gaming business, the thing that once defined Nvidia, is now just a little slice at 5.4%. For all intents and purposes, Nvidia is an AI infrastructure company now, period.
So here's the crucial point. It's the shift from selling parts to selling entire systems. The old model was all about moving individual graphics cards. The new model, which is just so much more profitable, is about selling a fully integrated, totally optimized stack. You're talking the Blackwell superchip, the high-speed NVLink interconnects, the Spectrum X networking. They're not selling you a brick anymore. They're selling you the whole building.
And here's a perfect example of this new model in action: networking. It's kind of the secret weapon here, the connective tissue holding these AI factories together. And it has become Nvidia's second fastest growing engine, absolutely exploding to over $11 billion in a single quarter. And why? Well, it's simple. When you have tens of thousands of GPUs all working together, the network becomes every bit as important as the chip itself. Okay, so this new business model is powerful, for sure, but it's what Nvidia is doing to protect it that is truly remarkable. Let's move on to our second pillar and see how they're building this economic fortress around the company. $95 billion. Now, this isn't revenue, it's a strategic wall of cash. This is how much Nvidia has committed to suppliers like TSMC, basically prepaying for years of advanced chip production. By booking up the world's leading-edge manufacturing capacity, they're essentially forcing competitors to wait in line for scraps. And then look at this, over $21 billion in inventory. In almost any other industry, this would be a massive red flag, a huge warning sign. But in the middle of an AI arms race, it's a strategic weapon. It guarantees that while competitors are stuck waiting for parts, Nvidia can deliver entire data centers. It's a moat built of pure silicon. This move right here, this was just genius. By investing $5 billion in Intel, Nvidia pulls off two critical goals at once. First, it secures a US-based alternative to its Taiwanese manufacturing, which is huge. And second, it pushes its own proprietary NVLink technology deep into the heart of the traditional server market, the whole x86 ecosystem where Intel has been king for decades. And here's another one, a masterclass in corporate strategy. Instead of a messy, full-blown acquisition that would attract all sorts of regulatory headaches, Nvidia just paid $2 billion for a license to Grok's super-fast inference technology. So in one move, they neutralize a really dangerous competitor and get to absorb all its innovations for their next generation of chips. Brilliant. So Nvidia's got the business model, and they've got the strategic moat. But the third pillar, well, it's perhaps the most powerful of all. They are accelerating into the future so fast that nobody can possibly catch up. I mean, just look at this roadmap. The product cycle used to be 2 years. Now, it's 1 year. They're going from Blackwell to Blackwell Ultra to the next generation Vera Rubin architecture, all within about 18 months. This relentless pace, it forces customers into a constant upgrade cycle just to stay in the game. But honestly, the final, unbreakable lock is the software. The CUDA platform has been the bedrock of AI for more than a decade. And now, with tools like NIMs, Nvidia is making it even easier to deploy AI models on their hardware. For companies like Meta or OpenAI,
The cost and the sheer complexity of trying to switch to a different platform. It's just astronomical. It's not going to happen.
Which, of course, brings us to the big question, the one everyone wants an answer to. With a multi-trillion-dollar market cap and the stock hitting all-time highs, is there any value left? Or is the party over?
All right, let's just look at the data. On a forward PE basis, Nvidia's at about 27 times earnings. Now, that's not cheap, but it's way, way less than AMD or Intel. The real story, though, is on the next line, the PEG ratio. This is the metric that really tells us if a stock is expensive relative to its growth. So what exactly is the PEG ratio? Well, think of it this way. It just balances the stock's price against its earnings growth. It basically asks, am I paying a fair price for the future growth that I'm expecting? And a number under 1 is often considered the sweet spot, suggesting the growth actually justifies the price. And Nvidia's PEG ratio? It's 0.79. This suggests that even at these incredible prices, the market might still be underestimating its explosive growth. So our verdict is that Nvidia is no longer just a tech stock. It's become the foundational asset for the entire AI revolution, the one you pay a premium for the certainty it provides. And that really leaves us with one final thought. As Nvidia moves from simply supplying a market to literally architecting the future itself, it forces us all to ask a pretty fundamental question. In a world that's being actively defined and built by a single company, is there really a ceiling on its value?